Good day to everyone joining us from around the world. Whether you're just waking up, midway through your trading session, or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for this global live stream session. My name is Vincent, and I'll be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking fund trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have shaped what WeMasterTrade represents today: skilled trader, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful Scarlett. Welcome, Scarlett.
Thank you so much, Vincent. Hello everyone, and thank you for spending your time with us. I'm truly looking forward to today's session. There's so much to cover, not just about trading strategies or rules, but about the full ecosystem that WeMasterTrade offers, from how you start to how you grow, how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely. And next to her is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's a real force in our trading space. Please welcome Raf.
It's Vincent, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack not just what we must offer, but how traders can truly take advantage of each part of our system, from packages to promotion to scaling and long-term profit sharing. If you have ever had questions or even doubts, today is the day to ask them.
And that's exactly what we are here for. Whether you're brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you a full picture, not just the highlight view. Over the course of this session, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional brokers or broker firms. Now, I want to be clear. This isn't about sales. This is about understanding. We want you to know what you're signing up for, what kind of structure supports your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structure, we will begin by sharing the story behind WeMasterTrade, how we were formed as a fund project, not a broker, which is a very important distinction. Unlike brokers who profit from volume or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profit only when you do well. That's the foundation.
Exactly, and from that philosophy flows everything we offer, especially our trading packages, which we'll be discussing in detail. We'll explain the logic behind each one, what kind of trader they ever looked at our packages and thought, which one is right for me. Today we'll answer that.
And more than that, we will also do a live comparison between packages. We'll be breaking down pricing, account size, maximum drawdowns, consistency rules, and even payouts side by side. To have you make a fully informed decision, it's one thing to see a number on the website, it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is on how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We will explain what the daily loss is, how it's calculated, why it includes both closed and floating profit and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we even address common misunderstandings about the trade sizing and risk per trade policies.
And we won't just explain rules in isolation, we'll explain them in the context of live trading decisions. We'll share some personal examples of mistakes I made when I first started trading under funded conditions and how I adjusted, because because rules are meant to restrict you. They're there to protect the integrity of your growth.
And while we are on the topic of helping you succeed, we will guide you through our current promotion plan, including limited time discount code, trader support campaign, capital opportunity, and how to rapidly qualify and submit proof. We have had some amazing response to our promotion, but also some confusion. So we'll be showing you exactly what to do step by step.
From there, we will transition into a discussion on our scale plan, which I personally think is one of the most underrated parts of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in place. If you perform well consistently, you don't just get payouts, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term income at WeMasterTrade is through our profit-sharing model. This is the heart of what makes us different from prop firms. When you trade on a funded account and generate profit without breaking rules, we share that profit with you up to 90%. But there's more to it than just the percentage. We'll explain the full payout cycle, thresholds, and top lines today.
Now, I know many of you watching today aren't just traders. You're also educators, influencers, or people with large networks. That's why we're also taking time to explain our affiliate program, and we will do it transparently. We will walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the tools referee rule and minimum funding conditions.
This is especially important because we want all our traders to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the terms, and building long-term income streams.
So, as you can tell, this is not just a surface level live stream. We will dive into everything: packages, rules, promos, scale up paths, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have a question at any point, please drop it in the chat. Our moderators are watching and will answer as many questions live as we can. Your voice matters.
And if you're watching this on replay, don't worry, we will leave timestamp and summaries below. And you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about having trader success.
To wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment. A commitment to be real traders, to create fair, structured, and scalable pathway for people around the world who are serious about trading as a profession, not a game. So if you are here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you a full picture of who WeMasterTrade really is, what we believe in, and why we build this platform the way we have. Because when you put in your trust and your trading into a company, understanding its philosophy isn't just helpful, it's essential. And so, this next segment is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into a real tools and outcome for traders like you. And to walk through that, I'm joined, as always, by two people who live and read this principle, Scarlett and Ralph. Let's start at the beginning.
Thanks, Vincent. To truly understand WeMasterTrade, you need to understand why it was created. Unlike many platforms or brokers that evolve from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital, regardless of their background locations or financial situation. We were founded in 2022 as part of the WeMasterTrade Group, headquartered in Vancouver, Canada. Why WeMasterTrade built its name on signal sharing, investor networks, and copy trading tech. WeMasterTrade was designed to serve a more focused vision to identify, support, and scale high-potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note, WeMasterTrade is not a broker. That's not just a label, it's a fundamental difference. We don't profit from spread or commissions. Our success is directly tied to the success of our traders. That's why everything we build, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, and you bring the skill. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structures. That's why we have invested heavily into with the WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory, trading psychology, all the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about theory, it's about implementation. We have designed a curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funding account. And to ensure our system and content meet global standards, WeMasterTrade is proud to hold an ISO 21001-2018 certification, which confirms that our educational products and trader development programs meet rigorous international criteria for quality, structure, and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called platforms come and go, WeMasterTrade has positioned itself with real operational stability, compliance frameworks, and internal accountability. We're not here for a season, we're here to help build careers.
And we have seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, on talking about how WeMasterTrade help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We had students become full-time traders, we had women re-enter the finance world after career breaks, and we had young professionals from underbanked regions finally access the market without funding accounts. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share weekly insights, trading psychology breakdowns, market reaction, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you're in a Telegram group, watching our YouTube series, or engaging with us on a live support, you will see what we actually listen.
And I'll speak honestly here, in many platforms, the trader is just a customer. At WeMasterTrade, the trader is the product. Your performance drives the business, your voice shapes the platform, and your consistency determines how far we can scale together. And that mutual accountability is rare and it's something we're proud of.
And if you have ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonials, take a look at our funded accounts, and connect with people who have gone through the system. The stories are real, the capital is real, the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We are here to challenge the status quo of trading access, to build systems that reward performance over promotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platform, it's a trading movement. And if you are ready to be a part of it, today's live stream will show you everything you need to know. Thank you Scarlett and Raf for that deep and honest walkthrough. Coming up next, we are going to take this foundation and connect it directly to our actual offering. That means we will be discussing all the different account packages available at WeMasterTrade, how they differ, who they are designed for, and what kind of results you can expect from each. Now that we explore who WeMasterTrade is and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that's best aligned with their goals, their style, and their current skill levels. And when we say packages, we are not just talking about dollar figures, we're talking about frameworks. Each package and WeMasterTrade represent a different pathway toward growth, and today we will walk you through all of them, what they offer, how they are structured, and most importantly, who they are designed for.
Exactly, Vincent. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we built two distinct product lines for traders, the challenge package and the instant funding package. Each line includes a variety of account size and configurations because we know that traders come with different strengths, risk appetites, and timelines.
So let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skills before being allocated capital. It's structured fair and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenge model, you begin with a stimulate account and your goal is to meet specific profit targets while staying within risk but reasonable risk parameters. There are three stages in total, phase 1, phase 2, and then the funded stage.
Take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you need to achieve an 8% profit target, which is $800 without reaching a 5% daily loss or a 10% overall loss limit. You'll have a limited time to achieve this. That's a key difference from many brokers. We don't pressure you with deadlines.
And once you pass phase 1, you will move to phase 2, where your profit target drops to 6%. That means $600. The risk will remain the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
And finally, once both phases are clear, you enter the funded account where you trade with real capital, have no profit targets, and your profit share jumps to 90%. That's one of the highest in the industry.
And this account is ideal for newer traders or experienced traders who want to start with lower pressures and learn the system. If you're still refining your strategies or want to get a feel for WeMasterTrade risk framework before scaling, this is the perfect package to begin with.
Now for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50,000, and 100,000 challenge packages. The structure is similar, two phases, the same 5% daily and 10% total loss limit, but the profit targets scale proportionally.
For example, in the $50,000 challenge, you need to hit a $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 to 100, giving you room to adjust position sizing.
The 25,000 to 100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. If you have already mastered the broad challenges or have a strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, the $45 for the 10,000 challenge. This fee is refundable once you become funded and meet minimum performance conditions. And if things don't go your way, you are eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access real capital immediately and get based purely on result? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly sets itself apart. Our instant funding model is designed to give experienced disciplined traders a chance to trade real capital from day one. No evaluation, no demo stages, just pure live trading, backed by a structured, fair, and transparent system.
And what makes it even more accessible is what you can choose from several different account types depending on your style, preferences, and goals. Today we'll walk you through each of the 5 main instant funding packages: standard, 51010, 510 510 no BC, and customized. We'll compare the details, but more importantly, we'll help you figure out which package is right for you.
Let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you are trading live capital. And every account, no matter the size, includes no time limit, up to 90% profit share, scale up plan toward 1,000 million, support for EAs, swing trades, scalping, and even HFT. Now, let's go package by package. And as we go, Scarlett, Raf, I want you to jump in with real advice. Who should actually choose which one? And what kind of traders you see success with each?
And let's start with the standard package. I always describe this one as the best friend for traders who want stability. You'll get it up to $200,000 in capital with a very manageable 4% daily loss limit and 6% overall limit.
It's like that calm, steady approach that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And how about the commissions?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, indices at $1, and stock at just $0.07 per lot.
And everything is allowed: news trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you're one who trade regularly, understand your strategy, wants a full range of assets, and plan to play the long game, this is your sweet spot.
It's perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you have ever had an account blow due to unrealistic rules, you will find the standard model refreshingly fair.
I also say it suits swing trader. The 4-6% risk profile gives just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 package. Save capital ceiling up to 200,000, but now you get 5% daily loss and a wider 10% overall loss limit. Why does that matter?
Well, that execution is massive for traders who scale into position or take multiple entries per setup. You have got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which align well with the risk window. Plus, you still get full support for scalping. EA's news trading is very traders friendly.
And this is best for day traders, especially those trading assets like NASDAQ or gold that move fast. If you have got a tested intraday strategies and just need some risk trading room, this is your package.
And also for traders who want structure but don't mind having a black profit target, the clip milestone motivates some people, especially if they pay out oriented.
Now here's a personal favorite, the 5-10-0. You get 5% daily and 10% overall loss, but no profit target, none, zero.
And that's a blessing for high precision traders. You're no longer chasing a number, you're just focused on protecting equity and growing capital slowly and safely.
And this one is loved by low frequency traders and snipers. If you enter 3 to 5 trades a week, this is your space. You are not penalized for patience, you are actually rewarded for it.
And who's it for? Veterans, swing traders, risk conscious traders, people who prioritize consistency over speed. If that's you, you'll thrive here.
And let's be honest, not everyone wants to hit targets. Some just want to trade small, trade well, and scale blindly. This is their home.
Now for the rule breakers, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 no busy remove the profit consistency tracking, right?
Exactly, same 5-10 risk profile, but you are not required to keep your profit growth smooth. One big winning day is totally fine.
That said, trade copiers are not allowed in this one. So it's for manual traders only, and you need to trade responsibly. But for a passive trader who sometimes hit big spike, this is the place.
It's perfect for high risk, high reward traders or anyone who had issues with consistency rules at other firms. You trade how you want, just keep it inside the drawdown box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss, overall loss to your liking, plus you can fund up to $200,000, more than any other account.
It's premium, flexible, and comes with on-trading style allows, including EA's new trading, weekend holding, HFT, and more. So it's suitable for top-tier professionals as edge fund traders, signal provider, high-volume traders, anyone with a very specific structure in mind. This package lets you build it.
I always say, if you try other models and nothing quite fits, build your own blueprint with customized. That freedom is rare.
To sum up, every instant front-end package we offer comes with a clear risk parameters, fair commission, deep market access, and real profit potential. There are no time limits, and payouts start as early as 1 day in.
And no matter your strategy, escaping, swing, algo, or manual, there's an account that aligns with you. The key is picking the right one now so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperform the biggest promise.
Up next, we will walk you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules that power our entire lab platform. Alright traders, now that you've seen the packages, let's talk about the part that either makes or breaks your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account, it comes down to one thing, the daily loss limit.
Yes, the dreaded daily loss. It's the one rule trader think they understand until it kicks them out of their account at 3:17 p.m. on a random Tuesday.
But here's the good news. Once you understand how it works, really works, it becomes one of your best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called the maximum daily loss?
It's the maximum amount of loss you're allowed to incur in both floating and closed trades or on any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the highest higher of either your balance or your equity at the start of the trading days. That's a really important distinction and is what trips a lot of people up.
Let's walk through a live example. Imagine it's the start of day 5. Your balance is 105,000. Your equity, however, is higher, 107,000
So
because
for
of open floating profit.
If you're on a 4% daily loss limit, we calculate it of the higher number, $107,000.
So 4% of 107,000 is around $4,000. That means your equity for the rest of the day can't drop below 102,000 or boom, the account is gone.
Right. And I think it's important to point this out. The system isn't waiting for a close. It's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
So now let's reverse it. Say it's the start of day 7. Your balance is 100,000 but your equity is 99,000 because your open trades are slightly in loss.
Since balance is higher, we base the 4% on the initial balance, so $4,000.
So now your equity must stay above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
So what happens if you break it? The system will send a market order to close on trades. Everything liquidates, your account is disabled and you can't trade again unless you budget a new bucket.
And here's the kicker, the auto close happens when the system detects the threshold will cross, but due to market fluctuation, your final P&L might look worse than the actual threshold, but because the system executes the closure based on the price slippage at the time of liquidation.
So even if you only intended to take 3,900 loss, one slippage by Indigo or NAS DAQ, and suddenly it's 42,000. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
For tip, know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2, check your equity, not just your balance. I can't stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equities, you are heading toward violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide a risk dashboard that shows your live loss status. Use them, check them, don't rely on memory.
Also, post trading after a big loss early in the day. If you lost 3% in the first hour of London session, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hours. If you are trading gold during NAB with full loss sign, you are practically begging to break the daily loss, cut position size, and drive post volatility.
What are the top rookie mistakes you see when it comes to the daily loss?
Number 1, over leveraging. Traders opening positions that are 5, 6, 7% of their account, thinking they close quickly, but if the trade turns red fast, it's already too late.
Number 2, holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 pip gap, the daily loss could be hit before you even open your eyes.
And in third, assuming that close trades are all that matters. They are not. Remember, equity includes both floating and closed positions. The total equity lies in your score.
I always say this to new traders, the daily loss rule isn't your enemy, it's your account airbag. It's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box. And if you learn to trade inside the box, you will last longer than 90% of the market.
And one last note, this isn't just about rules, it's about trust. WeMasterTrade funds you because We trust you that you manage risk responsibly. The daily loss is there to protect that trust on both sides. In the reverse segment, we cover the daily loss rule, and if you haven't already clicked that one, you are missing out. But now we move from the daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account stop loss, the line that can be crossed, not just for the day, but for the entire life of your account.
And this is where a lot of traders misunderstand how the rules work. They think, well, I didn't hit my daily limit, so I'm fine, but then a week later they chip away at their account and suddenly liquidate them.
The max loss rule is the last safety net. If the daily loss is your daily seatbelt, then max loss is your airbag. If that limit is hit, it means the account is deemed unsalvageable under your current trajectory and it is closed immediately.
So what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is, your real-time capital, including open trades, ever drop below a certain percentage of your starting balance, your account is gone, period.
And unlike the daily loss which resets every day, this one doesn't reset, it's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses that line, that's it.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance, not your equity, not your profit, but the original number you started with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of 50,000 and your max lot is 6%, which is 3,000.
That means your equity never go below $47,000 ever. Doesn't matter if you make $1,000 yesterday, the total loss from your highest point back down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you have lost 2,000 in closed trades and you have another 1,200 floating in red, your equity is now at 46,800. That's below the limit. Account is closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stands in real time, relative to that stop loss floor.
And here's where it gets interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you're in profit.
But your max lot limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still 47,000. What changes is how much room you have to fund before you hit it.
Exactly. You now have 4,000 in total buffer because 51,000 minus 47,000 equal 4,000. So your profits give you cushion, but the floors never move.
So once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers on trades are closed immediately at market price.
Permanently disabled. You need to purchase a new package if you want to continue trading. No reset, no rollbacks.
Alright, let's now get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total closed losses every day. You should always know how close you are to your max loss floor. Don't wait for a dashboard warning. Calculate it manually.
Second, use your profits as protection, not permission. Don't treat floating profit as a green light to increase risk. Instead, consider locking gains by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with bull stop placement can take you from safety to shutdown in a few minutes.
Fourth, stay cool when you close. If you are down 5% out of your 6% limit, that is not the time to double down. That's the time to step away, pause, and rethink your entries.
So, about the biggest mistake, underestimating floating drawdown. Traders close 3 closers and think, okay, I still got room, but they forget about the fourth trade, 14 minus 1800.
Second, traders who trade recovery after a bad day, they lose 4% in one day, come back swinging the next day thinking they'll make it back, and instead take another 2%, boom, violation.
Third, and this one hurts, ignoring slippage during major news. Even with a tight stop, new cancel can get you straight through your limit.
And the mass loss rule is there for a reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal or institutional, as a non-negotiable boundary.
Right, it's a reality check. If you are consistently pushing up against your max loss, the problem isn't the rule, the problem is your system or your psychology.
At WeMasterTrade, we are not just given capital, we teach in structure, and the max loss rule is what separates gamblers from professionals. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. It includes both close and floating losses, and once reached, your account is gone. Before we go with up next, we will take a short break and then we'll come back later. Welcome back to the WeMasterTrade live stream. Coming up next, we will explore the consistency rule and why steady profits matters more than big spikes when it comes to growing, scaling, and getting paid.
If you ever made 5,000 in one day, then make 200 in the next 4 days and wonder why your payout got flat, this next section is for you.
Let's dive into the rhythm of profitability and how to stay consistent under the WeMasterTrade model.
Alright traders, we have talked about the daily loss limit and we just covered the maximum loss rule, two pillars of protecting your capital. But now it's time to shift gear just a little and talk not about risk but about result. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you will need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or if you're just hoping to hit one big winning and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, and even scale up. So if you are funded and you are wondering why your payout didn't go through, this could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profits, the lower your ratio. The less consistent meaning you had one giant profit day and then smaller or losing day. The higher your ratio.
The idea is simple. If 80% of your total profit came from one day, that's not consistency, that's luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
And how is it calculated? The formula is really straightforward. Take your best trading day's profits and divide it by your overall profit since you started the account, then multiply by 100.
Best day divided by total profits multiplied by 100 equal your profit consistency percentage.
And just to be clear, best day refers to your highest close profit in a single calendar day, and total profits is the sum of all of your close profits minus any close losses or open losses across the life of the account.
So let's say you have had the following results over 5 trading days. Day 1, $100, day 2, $200, day 3, minus 50, day 4, 100, and day 5, 60.
And that means your total net profit across 5 days is $410.
And your best day was day 2, that's 200 profit.
So now we apply the formula 200 divided by $410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now let's say your account requires 20% profit consistency, which is common. This trader is way above that. They won't qualify for a payout yet.
So even though this trader is profitable, they are not consistent enough. They had one big day that made up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to traders. If you're relying on 1 or 2 big days to carry your entire account, that's not professional trading. That's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the ones who get scale up, who get features, and who get trusted with more capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Well, typically the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. And let's say you are over the limit, don't panic, you are not disqualified. You just need to keep trading and even out the curve.
Here's how to do that. Trade smaller size for a few days, take smaller control wins, and for $200, $300 days, avoid big swing trades, and that could spike your ratio again and spread profit across multiple days, not one monster setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profits heavily into one day, you might need to rebalance it. The block may be repeatable, but it won't pass this rule unless it's configured with buyout logic in mind.
So some common mistakes to avoid. Number 1. Traders hitting target early then taking the rest of the week up. That inflate your best day and leave the rest of your curve flat.
Mistake 2. Overtrading after a big day, thinking I'm safe now and trying to squeeze more instead of averaging out that high ratio.
Mistake number 3. Thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our master traders.
At the end of the day, this isn't about controlling you, it's about building habits that can handle scale. And if you can't be consistent with $25,000, what happens when we give you $100 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we've seen it time and time again. The traders who respect this rule, they are the ones who get multiple buyouts, referrals, and grow into six-figure for the account.
So don't fear the rule, understand it and use it as a feedback tool. If your ratio is too high, great. That means you have got profit. Now keep going and balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can track it anytime under your statistics tab.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wheels across multiple sessions and monitor your progress in the dashboard. We'll walk through the daily loss limit, tackle the maximum account loss, and examine how your profit consistency save your long-term payout and growth. And now, we arrive at the final and perhaps most overlooked rule of all, the risk consistency rule, or what we call the discipline test.
That's right, traders often think the biggest enemy is the market, but truthfully is inconsistent, especially in how much you're risking from one trade to the next.
So this rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing your position sizing. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
Let's break it down. At its core, the risk consistency rules is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all losses associated with that trade idea, both closed losses and floating losses. Even fees, commissions, and swap are counted.
And for some accounts like the 510 OBC package, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
Because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that makes you hard to scale.
This rule protects both you and the firm. It helps reverse capital, prevent large equity swing, and make sure your edge plays out over time.
So think of it as your account heartbeat. If your position size pulses up and down, 0.5 loss one day, 5 loss the next. The system flags it. That's not structure, that's chaos.
This is where it gets technical, but stay with us. The term trade idea isn't just one order. It's a group of trades that share the same logic.
If you open pre-buy position on SAU USD gold at different times, that's one trade idea.
Because it's the same symbol, same direction, and close around the same time, even if you open them at different times, they are seen as a single unified position from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into a logical bundle and applies the 2% rules across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limits.
For example, if you go long on gold, short on GBP/GBY, and short on AUD/USD, and each position has its own distinct direction and asset, those are 3 separate trade ideas and each one can risk up to 2%.
Let's say you go buy on gold and then you go buy again and again. You now have 3 open positions in the same direction on the same asset.
Yep, the system treats that as one trade, so if the combined floating risk or eventual loss from those positions exceeds 2% of your starting balance, boom, you have broken the rule.
Another mistake, opening multiple gold buys, then closing one 10 minutes later into order together. The system still group trades go within 3 minutes of each other, so be mindful of your close timing.
Let's go hands-on. Suppose you have a 100,000 account. The 2% max risk per trade idea means you can lose more than 2,000 on any trade idea total.
So you open 2 gold buys, 1 lot each. You don't place a stop loss. News hit, market drops 100 bips. Each lot lost $1,000. That's $2,000 total.
You are right on the line. If slippage or swap adds a few extra dollars, that's it. Rule broken, account flagged, or liquidated depending on the enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach may result in a loss of funding status or immediate closure.
So here are some pro tips to stay risk consistent. Tip 1. Set your lot size based on account risk, not emotion. Know how many bips equals 2%.
Tip 2. Use stop loss. Order religiously. Set them based on risk per trade idea, not random chart levels.
Tip 3. Don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Tip 4. Label your trade ideas mentally. If you are entering on the same setup, treat it as one. Size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale it smaller, use micro loss if needed. Keep the total exposure below 2%.
So the most common reason traders break these rules, stacking multiple entries on one trade idea thinking it's still separate.
Second, open high-risk trades after win, assuming they're playing with house money. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade may not be closed, but the floating rate still counts toward your 2% risk.
This isn't just policy, this is professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly, we are not here to micromanage you. We are here to protect your account, our capital, and the integrity of this community.
And traders who internalize this rule, who understand that small consistency risk is the foundation of scalable capital, those are the ones we grow. Those as the trader who go from 25,000 to 1 million.
If you want to be a professional trader, you have to think like one, and professional traders always know how much they're risking on every trade every day.
And if you are still guessing your lot size or opening trades because the setup feels right, take this as your sign, step it up, and get structure.
This is more than a rule. It's a habit. Build it now, and the battle to bigger capital and larger payouts become way more predictable. And that, my friends, wrap up the 4 essential rules of trading at WeMasterTrade. Daily loss, maximum loss, profit consistency, and risk consistency. Master these, and you are not just staying compliant. You are building a foundation for serious capital management, long-term payout, and scaling. You are watching the official WeMasterTrade livestream, and the best is still to come. Alright everyone, this is it. You made it through the risk rule, the profit condition, and the structure of our account. Now let's talk about why it's all worth it. Because at the end of the day, we know what every trader really wants.
More capital, more room to trade, bigger loss, higher rewards without ever putting your own money at risk. And that's exactly what the WeMasterTrade scale-up plan is built to provide. This is your roadmap from being a small account trader to managing a $1 million funding account. And it's not fantastic, it's a clear path with defined milestones.
The scale-up plan is our performance-based growth program. As you trade well, meaning you hit your targets, avoid violation, and demonstrate risk control. We increase your capital allocation. In other words, you earn more room to trade without spending more out of pocket.
And let's be clear, this isn't tied to subscription model or gimmick. You don't pay for scale up, you earn it through consistency, profits, and discipline.
And the scaling is aggressive. We are talking about doubling, tripling, and eventually scaling you on the way to 1 million in funded capital, depending on where you start.
At WeMasterTrade, we offer two types of scale-up plans, depending on your account type. We got percentage-based scaling and amount-based scaling.
Let's start with the percentage-based plan. You begin as an evaluation trader level 1 with 100% of your base account. Hit the 20% profit targets with profit consistency, and you promote it to level 2 where your capital increased by 50%.
And from there, the growth explodes. 300% on level 3, level 4, 600%, level 5, 1200%, level 6, 2400%, and finally, mass allocated capital, $1 million.
And for each level, you don't just need to hit the profit target. You also need to complete at least 2 payout cycles. So the system knows you're not just performing, you are stable.
Now for instant funding accounts, the scale works with set dollar targets and the plan adjusts depending on your initial funding size.
So let's take the 10,000 funded traders as an example. Here's how the levels look. 10,000 at level 1, 15,000 at level 2, 30,000 level 3, 60,000 level 4, 120,000 level 5, 240,000 level 6, 480,000 level 7, 960,000 at level 8, and finally level 9 at 1 million.
Each step and each sort of hit target, usually 10 to 20%, and some levels require profit consistency, especially in the early stage. Once you are beyond level 3 or level 4, the consistency requirements drop, and it becomes all about raw performance and discipline.
If you start with a $25,000 account, your first profit target is $5,000. Hit that with consistency, you bump up to $37,500, then $75,000, then $150,000, all the way to $1 million.
And don't worry, you don't lose your account if you don't hit the target fast. There are no time limits. You grow at your own pace as long as you stay within the rule.
To move to the next level, here's what you need to do. Reach this specific profit target, avoid all violations, especially mass loss or daily loss, complete at least 2 successful payouts, maintain profit consistency if required for that stage.
Once all conditions are met, we issue a personalized trading equipment and upgrade your account size.
And the best part, with a bigger account, you are earning more without increasing your risk per trade. That's real capital leverage. So let me be real for a second. The most common mistake, overtrading to force the target. Traders push too hard trying to scale fast and end up violating drawdown.
Another one, ignoring consistency in the early levels. If you make 80% of your profit in one day, that payout won't qualify. You need to spread your wins.
And of course, not planning your growth. You should know what your next scale target is and trade in a way that prepares for it. Don't just trade for today, trade for level 7.
Scaling isn't just financial, it's mental. Every level brings more capital but also more responsibility. If you start trading $10,000, how will you handle $300,000?
Exactly, that's why the scale up is step by step. We test your psychology, your discipline, your patience long before we hand you 7-figure capital.
And that's what makes it real funding, not demo hype, not a gimmick. It's a structured capital ladder for a real trader.
So if you're wondering whether it's worth staying consistent, passing challenges and trading patiently, this is your answer. From $10,000 to $1 million is possible, and it's been done repeatedly by WeMasterTrade traders.
It starts with one rule following: profit making, discipline money, then we grow it.
So take your time, learn the structure, respect the rules, because here at WeMasterTrade, when we say we scale performance, we mean it. And with that, we wrap the full walkthrough of WeMasterTrade funding system, from account setup to risk management to scale up. Whether you're starting with 10,000 or 200,000, the road to 1 million is real. Coming up in our final section, we will go with the financial news.
So, good afternoon everyone. It's Tuesday, August 12, and we got a packed economic calendar today. Scarlett, shall we kick things off with the Australian data from this morning?
Absolutely wrap at 11:30 a.m. We have a triple hit from the Reserve Bank of Australia, the cash rate, monetary policy statement and rate statement, followed by the press conference at 12:30 p.m. The cash rate came in exactly as forecast at 3.6%, down from the previous 3.85%.
Right, and that's a significant policy easing compared to the last meeting. A rate cut or hold at a lower level often signals the RBA is concerned about economic slowdown or wants to stimulate growth. AUD pairs show volatility as trader statistics, the doubles turn from the statement and press confidence.
Exactly. For short-term traders, this was a bright opportunity in AUD USD and AUD GBP. GBY, but remember, rate change have medium to long-term implications. So investors will be eyeing the RPA's future guidance carefully.
So then at 1 p.m. we move to the UK. The average earning index 3 months over year came in at 4.6%, slightly below both the forecast 4.7 and the previous 5%. That's a bit of a slowdown in wage growth.
Yeah, and the climate count change was interesting. Actual was minus 6.2k, way better than forecast, plus 18.7k, but now as strong as the previous minus 15.5k. This means fewer people are claiming unemployment benefits, which is a positive sign for the UK labour market.
For GBP traders, this mix is tricky. Weaker wage growth could reduce inflationary pressure, meaning less urgency for the Bank of England to hike rates. But better job data support economic stability. Next effect, GBP shows some initial choppiness.
Moving on, we have China new loans, 305 billion visas, 2,240 billion previous. That's a huge drop. This suggests weaker credit demand or tighter lending conditions, which can slow economic activity for commodity markets, especially iron ore and copper. This data is spurious, and it may weigh on AUD and NZD due to their trade ties with China.
At 4 p.m., the German economic sentiment printed at 39.5, way below the previous 52.7. That's a big decline in investor confidence, possibly due to ongoing European economic uncertainty. Euro took a small hit on this.
And tonight, 7:30 p.m., all eyes are on the US CPI numbers. Core CPI 0.3% actual versus 3.0 forecast, harder than expected. CPI 0.2 actual in line with forecast, and CPI 2.8% actual versus 2.7% forecast.
Yet, slightly harder inflation data could give the Fed more reason to keep rates elevated for longer. Expect volatility in USD pairs and gold during the New York session.
So to sum up, AUD saw action on RPA's dovish stance. GBP speaks with softer wage but better unemployment. China loans data weak, periods for commodity currencies. Euro pressure by poor German sentiment, and USD set for volatility with inflation slightly above expectations.
Exactly. Traders, set your stops, manage your risk, and be ready for the US CPI driven moves later today.
And that's the news for today. Thank you for so much for joining us today. We hope you found this session valuable and gain some new insights. Remember to subscribe, like, and share this session if it helped you, and stay tuned for our next one. If you have any more questions, feel free to reach out. Until next time, happy trading and take care.